What's up? This is Ryan with Planet Cheapskate. In this video, we're going to be going through all the details when it comes to qualifying for an FHA home loan. What credit score, debt to income, loan to value, and what is the loan limit, and all the particulars you need to be aware of when applying for this type of mortgage. Also, be sure to stick around for 3 loan hacks that will get you into an FHA loan for the absolute least amount of money possible. But first, I'd just like to take a very brief moment to personally invite you to subscribe and join our community. I do a home loan rate update every Friday going into the weekend, along with a new video every Thursday helping you manage through the world of credit, investing, real estate, and home loans. Also, when you do subscribe, be sure to hit that little bell and it will alert you whenever I release fresh content. Now, with all that out of the way, let's dive right in. So you're trying to decide which loan you should get. If you're unsure, try checking out my super quick video here that breaks down each of the main types of loans in under 2 minutes. But if you've decided that FHA is the loan for you, then you are in the right spot. FHA isn't just for first-time home buyers, but anyone who needs a little bit more leniency when it comes to purchasing a primary home that they will be occupying themselves. FHA is a very appealing loan on so many facets. First, it allows much lower credit scores, much higher debt to income ratios, and the capability to borrow a large amount of the price of the home. What I would say is maybe the worst part of the FHA loan is the high mortgage insurance, which is just an extra insurance policy the lender requires you to pay for in case you default on the mortgage. And while mortgage insurance does suck, it allows folks to get into a home with less than 20% down, which is a very good thing. We'll cover a bit of each of these subjects and much, much more. By the end of this video, you will know exactly what you need to qualify for an FHA home loan. And even better, after checking out my 3 loan hacks at the end of this video, you will know insider tricks to slip into an FHA loan with the least amount of out-of-pocket expense. So when it comes to FHA, you may qualify all the way down to a 500 credit score with some lenders. The unfortunate thing is about qualifying this low is you'll need to put 10% of the purchase price as a down payment on the home. Most people qualify with a score of 580 or better. By having at least a 580 credit score, you're only going to be required to put 3.5% down as a down payment. You can put more down if you want. If you put 10%, then after 11 years, your mortgage insurance will drop off on its own. This is the only way to make mortgage insurance drop off on an FHA loan. FHA loans have the most lenient credit score requirements out of all the major 4 loan types available to the general public. VA loans also go down to 500, but the credit report items are so much more strict when it comes to the collections or past due payments. You would also have needed to serve or be serving in the military for a VA home loan. FHA home loans also have some of the highest debt to income ratios allowed. Debt to income is just a ratio we use to determine the percentage of your income versus your monthly debt obligations. This gives a lender a good idea if you have enough income to make your payments plus keep up with your other bills. For FHA loans, the front-end ratio is 46.999%, which just means that your total mortgage payment cannot be over 46.999% of your income. The back-end ratio for DTI takes into account all of your debts and your proposed housing payment. This ratio cannot exceed 56.999% of your total income. Down payment and loan to value sort of go hand in hand, and allow me to explain. So as long as you have a 580 or above credit score, you will only need to put 3.5% down, which means you will be financing 96.5% of the home purchase from the lender. So your down payment is 3.5%. This comes from you, and your LTV or loan to value is 96.5%, which is what the lender will be bringing that you will pay them back for over the course of your mortgage. FHA loans are not the lowest down payment allowed, as USDA rural development loans are 0. However, with those loans, you have to live out in the boonies. There's also a conventional loan product that has many hoops you have to jump through that I'll be going through in subsequent videos, and that one only requires 3%. But FHA is still a super low down payment, relatively speaking. Now, you can't just go all willy-nilly and find a mansion and have the lender drop $1 million and you bring $35K to the party. No, FHA loans have loan limits, and the loan limit as of 2021 is $356,362. But these raise every year, so depending on when you are watching this, you'll need to check the limit. And I'm going to put a link where you can do that below in the comments. Now, if you live in Cali or somewhere where the price of a home is the equivalent of Jeff Bezos' 401k, then the FHA loan limit is a bit higher at $822,375 as of 2021. Again, you're going to have to check the link in the comments below for the update, as this is always increasing every year. Now, to qualify for an FHA home loan, you need to have at least 2 years of total employment. The only exception to this rule is if you were in college going to school and received a degree towards your eventual career. In that case, you would only need to provide your transcripts, college certificate, and offer letter from an employer. You don't have to have 2 years at the same employer or even in the same industry, just 2 years total. If there were any gaps in employment, you will need to be back for at least 30 days. If the work gap was greater than 6 months, then you will need to be back to work for 6 months before you are able to qualify for an FHA mortgage. So another thing about the FHA home loan is you will be required to make at least the minimum investment of the 3.5% down payment, and no credits can offset that amount. There are down payment assistance programs, but they are all garbage and I would hardly ever recommend them. They all come with negative, expensive features that you really don't want. The best way to handle your down payment minimum investment is by way of saving, receiving gift funds from family or a lifelong friend, a loan from your 401k or retirement. Now, you cannot, however, get any sort of unsecured or installation loan to pay your down payment with. So finishing up the FHA details to be aware of, I'd say the best and most lenient part of FHA is their allowance and forgiveness of credit issues. If you have collections, medical bills, student loans, bankruptcy, foreclosure, and stuff like that, then the FHA loan is going to be your best bet. For medical collections, they don't count against you as long as they are under $2,000. Regular collections count against your DTI as 5% of the total amount due, but most lenders have overlays that will force you to either set up a payment arrangement with the creditor or to settle/pay off the account. Now, if you've had a bankruptcy outside of a Chapter 13, you will need to wait 2 years until after the dismissal of the bankruptcy. For a Chapter 13 bankruptcy, you will need 12 months of on-time payments and permission from the court in order to proceed with an FHA loan. Applying with a foreclosure, deed in lieu of foreclosure, or a short sale, you will need to wait at least 3 years after the incident was reported on your credit report. And if you have student loans, whether they are active, deferred, or in forbearance, they will count against your DTI as 0.5% of the total balance. So, as promised, 3 loan hacks that will get you into a home with an FHA loan with the least amount of out-of-pocket as possible. So, most people here would probably scream to check out a DPA or down payment assistance program. Not me. DPAs are garbage and I would never recommend them, and they're never a good idea because of the strings that come attached to them. A good lender who has your best interest in mind will suggest one of these 2 instead. First, try to offer over asking price a bit and request the difference back in a seller credit. For instance, if the seller is asking $220,000 for the home, offer $225,000 and ask for $5,000 in seller credit to offset your closing costs. The second option or loan hack would be this. Typically, a DPA is going to screw you in one of 2 ways. They'll either raise your interest rate or raise your mortgage insurance amount. The worst part of these DPA programs is they lock you into the loan for a set amount of time, or you have to pay a fee to get out of it. So instead of that, why not just do this? You request from the lender what is called lender credit to offset closing costs. You do this by bumping up your rate, even slightly, and since you're not taking your best rate, the lender will actually give you a credit for taking a higher rate. Even better, you're not locked into anything and can refinance to a lower rate after 6 months. Now, the one negative thing about these loan hacks is they don't cover your actual down payment, but they can diminish your closing costs down to nothing, where you will only really need to come up with your down payment amount. Now, my next hack actually does help with a down payment, but not all lenders do it, so you'll have to shop around and ask questions. The best case is probably to go to a broker so they can work with multiple lenders. But the third loan hack is to find a lender who will count your tax proration you receive at closing toward your mandatory minimum investment for the loan. So this basically reduces your down payment based on your county tax proration you receive at closing from the time you didn't live in the home. Ask your loan officer more about each of these or reach out to me and I'll explain them further. So there you have it, everything you need to know about qualifying for an FHA home loan, along with 3 loan hacks that will get you into a home using FHA financing for the least amount of money out of pocket. Please leave a comment below if I missed anything or you have a question. I'd love to hear from you. And listen, if you gained value or knowledge from this video, do me a huge favor and smash that like button so more people just like you can see this info. And if you liked this video, I'd like to invite you to watch one of my other videos. Over here, I walk you through the complete home buying process step by step. And over here, YouTube has determined that you may enjoy this video. Thank you for tuning in. Until next time, best of luck.